wanted to thank you for coming into our next episode here of Doing Insurance Right. I am your host, Scott Jenkins, and today we're going to go over homeowners insurance and just explaining what the coverages mean and what they are. So when you're looking at a homeowner's insurance policy, typically what you're going to see first is coverage A. Coverage A is going to have a dwelling number amount. So a dwelling amount has nothing to do with the value of the home, because value of the home is going to have a lot to do with resale, obviously, the area you're in, things of that nature, where the dwelling amount is basically, as we call it, sticks and bricks, how much it's going to cost to completely rebuild the home from a complete fire or, let's say, disaster that takes out the home completely. So that's what that amount refers to. Now, in a lot of policies, you're going to see some sort of replacement cost. Example, with farmers, we have guaranteed replacement cost. So you'll see an additional dollar amount built on top of that policy. For an example, so if there's 10% additional, so if you have a $200,000 dwelling limit, more times than not, you're probably going to see a $220,000 total allotment for that actual dwelling. The next part you're going to get into is what they call separate structures. Out in Arizona, you don't see that a lot, but you do in other areas of the country. So it's in a structure that's not attached to the house. So it could be a shed, separated garage, in some cases fence, so on and so forth. So that's going to determine the amount for the separate structures. Typically, that's going to be 10% of your dwelling amount. So if your dwelling amount is $200,000 to rebuild the home, there's an additional $20,000 set up for separate structures. Now, there is a chance to go to 5% to maybe save a couple dollars or more if you have additional separate structures that need more coverage. Coverage C you're going to see in the amount as well is going to be personal property. So if we took the house, we were able to turn that house upside down and shake it out, anything that would fall out of that house would be considered personal property. So you're going to be looking at clothes, furniture, electronics, whatever, pots and pans, kitchen things, picture frames, you name it, anything that falls out, that would be another personal property tab. Now, some people are going to say, well, that seems like a high amount for personal property. Well, remember, on a lot of these, if you have replacement cost, we're not going to the Goodwill to replace these items. We are buying these items brand new. So if you have a 75-inch TV that's 3 years old, we're still going to replace it with the 75-inch TV that's now new. So what does it cost new? Not does what it's worth now. So depending on if you have an actual cash value policy or replacement cost is going to determine a lot of how much actual personal property that you need. So making sure you take a quick look at that item is a big deal on that. Then you're also going to have what they call a loss of use. Typically, there's going to be a dollar amount and a term limit on it. So a lot of times you're going to see anywhere from 12 to 24 months and then also a dollar amount. Now, depending on where you're at in the country on how quickly they can rebuild a home, that is going to be a huge difference. If you're in California, for example, you're probably going to need the 24 months due to the fact that it's taking so long to rebuild houses. If you're here in Arizona, 12 months is probably more than enough, unless it's a custom-built home. So just making sure that you have that, at least that coverage there. And then loss of use is going to take care of your dwelling outside of that time period while they're redoing the home. So, it's going to pay for your living expenses, and things of that nature. Obviously, because if you still have a mortgage, you're still making the mortgage payment on a place you can't live in, so you're going to need things of that nature. Now, there are going to be some other variances depending on the policy itself. If they have what they call floaters for certain jewelry pieces that are over a certain dollar amount, guns if over a certain dollar amount is a big one that we see here in Arizona. There's going to be all kinds of different options there. Every company has a little bit difference on how much they're willing to take in personal floaters. For example, jewelry, if you have a client or you are a client that has extremely high-end jewelry, there's probably going to be a couple different cases maybe where you have to go outside of the main program, but that will determine that. And the next thing I wanted to go over is with your home policy is home deductible. Now, what you really need to figure when you're trying to figure out what is the proper deductible for you is to remember that a home claim sticks with you twice as long as an auto claim does. So 3 years on an auto claim, roughly 6 on a home claim. So how much are we going to spend in order to keep that home claim off of our record, therefore not affecting our home insurance rate? Because it can be a drastic amount. It may not be 25%, it may be 100%. If you ask yourself a personal question of, is it going to be, would I replace it by myself if it was $1,000? Would I do it myself if it was going to cost under $1,500? Would I do it myself if it was going to cost under $2,500? Sort of where is your threshold where you think you would need to turn that into insurance? So if you're pretty sure that, a couple $1,000 repair, you wouldn't turn it into insurance, I would probably make sure my deductible is $1,500 or higher, just due to the fact that I don't want to pay additional premiums for a $500 deductible. or a $1,000 deductible. So it's all going to depend on that there. Now, that's going to be your single-family dwelling, and you're also going to see that in mobile home coverage. You're going to see some similarities in townhome and condo. There are some differences with townhome and condo because the association does cover the outside walls, but you as a consumer, if you live in one of those areas, are responsible for the inside walls and all the contents in. So there are some difference in variables there as well. If you'd like to discuss it further, you can feel free to check us out on the website at scottjenkinsinsuranceagency.com, or feel free to email me from the website as well. I'd be more than happy to answer a question for you. And as always, if you could do myself and our agency a great, huge favor by either rate, review, or subscribe on whatever platform you're listening to the podcast on to help spread the word about the podcast and keep all this going for us. Thank you so much. Do appreciate it. And we'll talk in the next episode.